Good day, guys. Hope everyone is doing well. Today, I want to quickly discuss self-employment income as it relates to taxes. My name is Martin Sands. I'm a local licensed CPA here in the Atlanta, Georgia area. Keeping with the same example as we did before for W-2 income, we'll keep that same. We'll use the same total income of $75,900, but instead of it being W-2 income, this is self-employment income. So instead of it being reported on line 1 of the 1040, page 1, it'll be reported on page 1, line 8. Okay? Total income, line 9, $75,900. The first thing we're going to do is go over to page 2. Okay, line 23. We're going to calculate self-employment taxes. Self-employment taxes is 6.2% Social Security taxes and 1.45% Medicare taxes. Okay, adding the two, that's 7.65%. Okay, as an owner employee, as a self-employed business owner, you're responsible for paying both the employee's portion and the employer's portion. So 7.65% multiplied by 2, 15.3%. Okay? So first things first, we're going to take $75,900, multiply it by 92.35%. Okay? That's going to give us $70,094. Okay? We're going to take $70,094 multiplied by 15.3%. Okay? That's going to give us total self-employment taxes. Total self-employment taxes of $10,725. Okay? Why did I take that $75,900 in step 1 and multiply it by 92.35%? If you were an employee, working for your W-2 employee, working for your employer, you get paid $100 a week. Your take-home pay would be $92.35. Okay, that's your take-home pay. Your employer is going to withhold $7.65 for Social Security and Medicare taxes. All right, so we're trying to use the equivalent of what that would be for if you have $75,900, what that would work out to be if you were an employee, okay? 92.35%. All right, so that's why we started at that point from there. And that's a little bit backward convoluted explanation, but that's the explanation for it. From there, you also have to keep in mind that this is self-employment income and you're paying employees and the employer portion of Social Security and Medicare taxes. That's why from there you go back to multiplying it at 15.3%, kind of backwards. Instead of just going straight from $75,900 multiplied by 15.3%. But that's the way it is. That's how we calculate self-employment taxes. Line 23, page 2 of the 1040. All right, we got that out of the way. So the 1/2, that's the employer's portion. That is an actual business expense, and you're allowed a deduction for that 1/2, which is reported on. You can take that deduction on page 1 of the 1040, line 10. Okay? So then we'll subtract 1/2 of the 10,725. So that equals to 5,363, subtracting 5,363 from $75,900. Okay, that puts us at $70,537. Okay, next step is to calculate QBI deduction, qualified business income deduction. So the government, and with the TCJA Act that was passed in 2017, the government put a provision in there for self-employed business owners to have a 20% deduction, right, from your income, the adjusted gross income. And that 20% is either, it's a smaller amount of 20% of adjusted gross income or 20% of taxable income before the QBI deduction. All right? So up until this point, we don't know what the QBI deduction is. So pretty much it's just 20% of taxable income up until this point, or 20% of adjusted gross income. All right, adjusted gross income, as we mentioned, is 70,537. Okay, taxable income up until this point. All right, we're going to take 70,537 minus the $14,600 standard deduction. That puts us at 55,937. Obviously, 55,937 is smaller of the two. We're going to have to go with 20% of 55,937. That gives us a QBI deduction of 11,187. Okay, that amount goes in line 13. All right, so now we have all the pieces to calculate taxable income. All right, so after we're listing all those numbers, line 13, add 12 and 13 as instructed on line 14, and that gives us 25,787. It brings us to line 15, taxable income of 44,750. Okay, so that's how this works, guys, in a nutshell. Taxes. Yesterday we kept taxes somewhere around 10%. So in that same light, we'll keep, with the same estimation of taxes, about 10% of taxable income to calculate taxes. So let's just say 4,000. Okay, so line 16 taxes at 4,000. But also keep in mind, we have line 23, self-employment tax, 10,725. So our total taxes is $14,725. All right, that's what we're looking at when we have self-employment income. Okay, the same $75,900 as self-employment income. Okay, 1099 NEC income versus $75,900 on W-2. Okay, we're looking at total taxes of $14,725. All right, so this is where tax strategy comes in, professional help comes in, where you consider incorporating at this point. You consider tax strategies such as self-employment retirement plan, insurance payments, self-employment health insurance deductions. As a W-2 employee, you don't get to deduct your insurance premiums. Matter of fact, that's not even taxable. That's not included in your W-2 income, so it's not taxable. But as a self-employed business owner, you can deduct those insurance premiums as self-employment health insurance premium deduction. Okay, full amounts. So this is where you need to maximize every bit of your deductions and credits, right? Because you got to do everything to reduce that $14,725. Okay, you had no withholdings throughout the entire year while you were earning that income of $75,900, as opposed to on the W-2, you were holding, as you remember, small increments over the entire year. You had small increments of withholding, income tax withholdings taken out of your income, right? Your paycheck every 2 weeks, bi-weekly if you get paid bi-weekly, and so on and so forth. With self-employment income, you have to be disciplined to set aside your own withholdings, right, for your taxes. Actually, you are required to make quarterly estimated taxes every quarter, 4 quarters for the year. Every quarter, you're required to make a deposit so that you could have some type of withholding there to go towards the taxes that's going to be due at year end when it's time to file your taxes. So if you're just earning your income and splurging and blowing your income without putting aside any withholdings for income taxes, and especially self-employment taxes, putting aside anything for any of those taxes, zero withholdings, then definitely, absolutely, 1,000%, it's a zero refund. There's absolutely no way to get a refund at that point, right? With that type of income anyways, right? But anyways, just wanted to discuss the basics there. Beyond the basics, yeah, there could be refunds and everything else. Your income falls below a certain threshold with earned income credit, depending on your filing status, your dependents, and all that stuff. This is not the purpose of this discussion, okay? Just discussing the bare bones basics of how self-employment income works in relation to taxes. All right? If this cleared up anything a little bit better for you as far as how that works, smash the subscribe button. I'd appreciate it. All right, until next time, hey, talk to you guys. Have a good one.